Guys, welcome back. This is Vishal. For we will discuss about today the EMA. What we see a 50-day moving average EMA. So I hope you watch this video and see how we can use our day moving average EMA, and that's good for the great. We can capture the bigger move. I hope you have to watch it out this video.
50-day moving average is one of the highest win rate strategy and my favorite easy, simple trading strategy for any market, and this will make money. In this video, I will show you how to use step-by-step guide to implementing this strategy. Just remember, if you go with 1 day time frame, 1 HR time frame, 15 minutes time frame, and weekly is best as trade. 1. Identify the 50-day moving average. Try to trade high volume top 50 stocks for best result. Go setting and apply indicator moving average go setting change length into 50 SMA, which is simple moving average ARN. This calculate the 50-day moving average by averaging the closing prices of the past 50 trading days. This can be done using trading software or charting tools available on most trading platforms. 2. Monitor price action. Look for the price to approach the 50 MA. The strategy assumes that the 50 MA acts as a support level in an uptrend and as a resistance level in a downtrend. Just find trends. 3. Confirm the bounce. Watch for a bounce or reversal in price when it reaches the 50 MA. Ideally, you want to see a clear price action signal, such as a bullish candlestick pattern, example a hammer or engulfing pattern, if the price is bouncing upwards. 4. Entry signal. Hour to enter a trade when you observe a confirmation that the price is bouncing off the 50 MA. For a buy order, this typically means a bullish reversal pattern or a candlestick close above the 50 MA after touching it. 1 second candle break high, we enter in trade. 5. Set stop loss and take profit levels. Establish stop loss orders to manage risk. A common approach is to place a stop loss below the 50 MA or recent candle low with buffer if the price is bouncing upwards. For take profit, set a target based on a risk-reward ratio or technical resistance levels, or 1.3 is best. 6. Monitor, trade, and adjust. Once in the trade, monitor the position regularly. Adjust stop loss orders to lock in profits as the price moves in your favor. You can also trail stops to follow the price if the trend continues. This strategy works best in trending markets where the 50 MA is more likely to act as a dynamic support or resistance level. It's important to use other indicators and analysis methods to confirm trades and avoid false signals. Remember, risk management is everything. Take risks which is affordable for you, or 1% or 0.5% of your capital according to your capital. But profit is meaningful. I prefer this strategy on daily candle for best result. If you like this video, subscribe our channel. Thank you.
So I hope guys you understand what I say here. So thank you so much. I hope you like our videos, and we will make next videos for you. Thank you so much.